Topic 1. Markets and investing are dominated by an AI-driven rally and repositioning. The market is being retooled around an AI theme, with heavy flows into leveraged and AI tech ETFs. U.S. ETF assets roughly expanding from about $39 billion to $84 billion in 2 months, and similar big increases in Korean and Taiwanese leverage funds, concentrating capital into memory, semiconductor, and AI infrastructure names, and raising the risk of sharp downturns on any correction. Massive anticipated AI and tech IPOs and financings, OpenAI, Anthropic, SpaceX, among others, mean large forthcoming stock supply. Banks say liquidity can handle it, but market voices warn of overheating and greed. Big capital tests include Alphabet's roughly $80 billion equity move and large planned secondary sales, while exchanges and derivatives venues fell after the CFTC approved Bitcoin perpetual futures, and Bitcoin itself slid to near-year lows around $65,000 as liquidity rotates into IPOs and private markets. Private markets showed stress after Partners Group limited redemptions, knocking down KKR, Blackstone, Ares, and peers. Overall, concentrated leverage, AI demand, large IPO supply, and cross-market stress raise short-term volatility and downside risks. Topic 2. Tech and regulation are clashing globally, raising policy risk for multinationals. In the U.S., an executive order asks companies to voluntarily provide advanced AI models to the government for pre-deployment review, up to 30 days, to assess cyber and security risks, increasing uncertainty over release timing and disclosures. The EU is pushing a tech sovereignty package, more chip support and local cloud AI data center policies and limits on U.S. cloud use for sensitive government data, aimed at reducing big tech dependency and reshaping procurement and regulatory landscapes. China is tightening oversight of offshore brokers, tiger brokers, Fuchs, Longbridge targeted, to steer retail flows toward Hong Kong and domestic listings, weakening U.S. market access for Chinese issuers and investors. Trade policy is heating up. USTR proposals under Section 301 would impose tariffs up to about 12.5% for many countries, higher in some cases, and broader tariff investigations raise supply chain and compliance costs. Companies must reassess governance, data residency, supply diversification, and regulatory engagement. Topic 3. Geopolitics and energy shocks are unsettling markets and central banks. Renewed Middle East hostilities tied to Iran, missile incidents, U.S. tech, military actions, and diplomatic stalemates have raised maritime and regional risk, pushing oil prices higher and elevating inflation concerns. Brent and other benchmarks rose roughly 1 to 3% on the tensions, amplifying inflationary pressure and complicating central bank timing on rate moves as higher energy costs feed through to consumer prices. Markets reacted with weakness in European and UK equities. Energy-sensitive sectors underperformed, and safe haven dynamics remained mixed. BOJ officials signaled that energy-driven inflation might make a near-term rate move likelier, while the Fed's policy path faces renewed scrutiny. Geopolitical sanctions and policy measures, including U.S. actions against Iran and crypto-related sanctions, add further uncertainty, and investors are watching incoming macro indicators and Middle East developments for cues on inflation, rates, and market volatility. Topic 4. CBS News sees a personnel and leadership shakeup centered on a clash at 60 Minutes. Under executive editor Barry Weiss's broader Newsroom reorganization, friction rose as longtime 60 Minutes correspondent Scott Pelley publicly confronted newly appointed lead producer Nick Bilton at a staff meeting, accusing leadership of harming the program and questioning recent firings. Bilton reported Pelley's confrontation as rude and hostile and moved to terminate him for cause. CBS announced Pelley's firing, while management framed the decision around a breakdown of trust, even as they acknowledged his past contributions.